Hello and welcome to another update on the Dow Jones Index. Yeah, quick update as we are starting a new trading week. The Dow Jones is, like the other indices, is recovering, and we can currently identify a corrective rally from the swing low that formed in April. Like on many other index charts, it is possible that a very, very substantial price top has formed on the Dow Jones. It's just a very, very full wave count to the upside. I'm talking about the long term here, and a much, much larger correction could start to unfold. I haven't even labeled the whole correction, but yeah, it could be really a long-term bear market that could be around the corner. But we are still holding in this pattern up here, which I'm labeling as an ending diagonal pattern from the 2020 low. So for example, in the yellow scenario, I can easily call it an ascending wedge pattern, an ending diagonal in which we had a wave 1, a wave 2, a wave 3, a wave 4, wave 5. It just has odd proportions, but it's a valid scenario. It did hold the support area in April, and therefore this remains a valid scenario. Now, I'm slightly leaning towards one more high at this point. That's also my view when we talk about the Nasdaq. It's the same perspective, but still we cannot ignore that risk. Okay, so the fact that this is only a 3-wave corrective rally for now suggests that we need to be on the side of caution, but the trend is still up, no breakdown yet, but the wave count is now pretty full, and the price has now reached a standard target projection for the internal C wave of that rally. So from an Elliott Wave point of view, these corrective rallies consist of ABC structures, and the C wave typically would reach this blue zone based on Fibonacci extension levels, projections, mathematical projections. We are there now. Next resistance is around the 43,140 area, but there's likely some structural resistance here before at around 42,810. Either way, the wave count is full, just waiting for a signal that a pullback starts. Would take a break below this last swing low at 41,765 to indicate a pullback might be unfolding, and then the focus can shift to this orange support region between $37,850 and $40,270 as Fibonacci support. Yeah, this would be standard support here, and the obviously the yellow scenario is bullish. So we move up in an ABC structure because we're dealing with a diagonal pattern. But if the decline is not corrective but impulsive, and especially if we break below support, well, then this is likely the white scenario, but it's too early to tell. Both remain possible. In both structures, the risk is high now because we are approaching, well, ideal targets. We've already reached ideal targets, so it's just a matter of understanding that this larger correction could start at any point. But if the pullback is corrective, I'm definitely going to watch for that. We have to pay close attention to this support area to see is there going to be any reaction. And this would be classed, yeah, an ABC structure. But as I said, it really depends on how this first decline will look like. If it's a 3-wave move down, corrective, then it adds weight to the yellow scenario. If we see 5 waves down, then it could still be yellow, but opens the door wider to a more bearish interpretation in the white scenario. But either way, a large, I would say, bear market or much larger correction is around the corner from a long-term chart point of view anyway, either now or after one more high. And again, I'm currently slightly leaning towards one more high, but that might change depending on the structure of this pullback. Thanks so much. Bye-bye.